Okay, I think it's now 5 p.m. in London, 12 noon in Toronto or New York, and 9 a.m. in Vancouver or San Francisco. So wherever you are in the world, a really warm welcome to you. My name is Andrew Thake, and I'm the host of today's Minds and Money 5 at 5 show, which is sponsored by Renforth Resources, Goldplay Mining, UR Energy, and is brought to you in association with the Resource Global Network. For those of you who don't know, 5 at 5 now been running for 2 years. We started in April 2020. The show runs for around about 50 or so minutes, and this is episode 106. For today's show, we have a great lineup of guests. They are Nicole Brewster, who is President and CEO of Renforth Resources, Catalin, Kilofliski, President and CEO of Goldplay Mining, John Cash, who's CEO of UR Energy, and Andrew O'Donnell, who is Managing Director of the Market Mindset. A warm welcome to you. I think that just before we go to our first guest, I'd like to ask my colleague Katrina whether we could perhaps share a polling question that we have for you on the screen. If it's possible to share the polling question. A very straightforward polling question to go and express your views is: will mining stocks as a whole go up or down over the course of the next 12 months? Got yes, no, or unsure. Whilst you're voting, I'd like to introduce Andrew O'Donnell, Managing Director of Market Mindset. It's a financial media site that bridges the gaps between family offices, funds, investors, and public companies. Throughout his career, Mr. O'Donnell has worked at various levels of the financial industry at reputable companies such as Standard Life, RBC, and Merrill Lynch. Andrew has made his mission to seek out innovative, interesting new market opportunities. Andrew, how optimistic or pessimistic are you about the stock market at the moment, and mining stocks in particular?
I'm not optimistic necessarily about the stock market, and certainly not optimistic about the economy. But that being said, we're kind of in this lull and this kind of state of wait, where we're making this huge shift. So to me, we need a lot of leadership. But once we get the go ahead, I think we all know that we're in a very chaotic period of time, that there's an energy shift. And once we see what the plan is, and we see like some of these big funds start to roll out and present to everyone the critical need of not only all of these metals and materials, and how we're going to get there, that would be, I guess, the big signal, and then to really push forth with not only infrastructure in the West, especially the US, but to start actually implementing some of these changes and try to meet some of the issues that have really come up to pass, because before the COVID pandemic, which really highlighted them, and then to see what's going to happen. So I'm not dodging the question. I'm not optimistic, but the big problem, I think, is leadership. And until we see that and we see an actual plan unfold, I think people are still kind of waiting on the sidelines, just waiting and kind of what's going to be the catalyst to change.
Mm-hmm. One obviously sort of like challenge we have seen in the first 6 months of 2022 is quite a bit of market volatility. How have you been managing that within your portfolio?
We're lucky because we focus. I was never a fan of, say, FANG. So whenever I have to remember that we focus on very specific stocks and very specific markets, and I'm all in those. I keep in mind that most investors, and the ones I'm certainly trying to encourage to look in our sector, are the generalist investors that own a US equity or an ETF that almost certainly owns FANG, because that makes up such a major component of the market, which I'm not a fan of, and I don't spend a lot of time talking about, but I considered most of it overvalued, and also they don't align with my kind of values as to where I want to see the future go. And that's what we focus on with the site, and with what I talk about is, now more than ever, if people align their values with what they want to see in the future, especially during these chaotic times where it's a little bit more pain, there's a big upside, not only financially, for aligning those values within companies that are doing the right thing, but you're going to be a part of a big shift in energy and a big part in innovation that, if it takes 5 years, 10 years, whatever amount of time, you would feel like that kind of, if we imagine what it would be like to be part of that big change on the end of it, there's a big sense of satisfaction to that, because it is a pivotal time in history. And it's uncomfortable to say the least. But I think if we could harness people and to provide a roadmap and to show them how, especially mining is that critical component, and that supply chain of who has it, how do we get it, that if we harness that potential and that story well, it can really lead us down that path faster and much easier.
Mm-hmm. Just looking at the polling which is coming in, it's coming out as approximately 60% think mining stocks will broadly go up, 18% will go down, with and the remaining 24% being unsure. Just talking about the mining stocks and the commodities that might go up in the next 12 months, which commodities do you particularly find attractive at the moment, and why?
There's lots that I like for different reasons. And I mean, the obvious one, I mean, we're lucky because we've got a uranium company. I see uranium has a huge potential this year. There's a lot of catalysts there. I always like gold. I mean, we're in inflation. We're in a high inflation area. So it's great to have Catalin here, and has a gold play, but also copper. I mean, that's the standard. That's our basis for kind of, movement of an economy. And oftentimes the generalist investor isn't as excited about copper, but once they realize that it's that backbone to the entire electric kind of future, they get a little bit more, charged up about it. As well, it's like a nickel is so incredibly important, because we know lithium, and that kind of gets out more because of Elon Musk, and he'll make the odd lithium statement every once in a while. But if someone actually becomes a bit more interested about the battery, they go, it's like an 8-to-1 ratio of nickel required for a battery. And I think whenever we put those all together and we start to see where do we get these resources, that's going to matter from an ESG perspective moving forward. Never mind the fact trying to ship them with costs being up so exorbitantly high, taking inflation out of the picture entirely. I think we have a chance right now for a lot of these commodities to tell their story and to help shape the shift this kind of new green vision that everyone wants to see.
Mm-hmm. Obviously, like one thing that's really been brought home to us this year with the invasion of Ukraine is security of supply chains. What pressure points has that brought to the commodities market from your point of view?
I mean, the supply chain issue would be something we've been, kind of critical of for quite a while. And we kind of looked at before even, and not to jump around too much, but we invested in some fertilizer, food kind of stock back in August. And those did very well. We're looking at them again because we saw like the food destabilization and supply chain issues were pretty huge. Ukraine, once that war started, it's the breadbasket of Europe, but also more importantly, and almost to more extent, the breadbasket of Middle East. That then put on another layer of scarcity. And we've got Kazakhstan with uranium and nuclear, but with food, I mean, I kind of say to people, it's nice and glamorous to think of all the innovation and the incredible things we're doing in tech, and we just assume we've got all these other things figured out, and we don't. There's a lot of headlines, whether it's from the IMF, the World Bank, on The Economist, saying there's going to be massive food shortage, and I don't mean like the ones that we see here in the West. I mean, there will be, but it's not the same thing as in a developing country where we're seeing that hit. And I mean, we've pulled back on some of the freight costs right now on shipping, but shipping is still a huge issue. And I mean, trucking capacity is down about 45%, and with gas going through the roof, that's these truckers aren't going to spend as much money driving around and distributing goods unless they're charging a ton more. And we see, a lot of the shipping containers have been resolved, say in Vancouver, they're been sitting out there, not coming to port. In the past year, those costs have gone up over 400%. So I even know if I ordered just my little coffee pods on Amazon, it's cost me $10 just to ship it. And that's a big jump from what it used to be as well. So even just seeing it for a small product you're seeing it already, and it starts to add up very quickly. So I think that bodes well to some degree for a lot of North American miners, is that supply chain issue of a company goes, can we get direct vertically integrated customers that want access to our nickel, to our uranium, to whatever resource we happen to have.
Mm-hmm. just kind of like bringing in our other guest panelists, perhaps going to John Cash first. Do you think kind of like, I guess it's like a double question to each the three panelists. Going to John Cash first, do you think the mining stocks will go down or up over the course of the next 12 months? And do you have any sort of like thoughts to add to what Andrew has just said?
I'm uncertain on where things are headed. I think it really, Andrew hit a good point. It depends on some leadership issues, which really seems to be lacking globally right now. It's quite disappointing. And that's going to have a big impact going forward, as well as inflation. So I'm uncertain where things are going to head at this point. I think a lot of it depends too on Russia and Ukraine and the situation there. Does that become a broader war? Does that drag on? And what's the impact of that on global supply? Shipping, certainly in the uranium commodity, shipping logistics has become a severe problem, and that could drive prices higher in our commodity, but it's going to have an impact globally on every commodity. So a lot of things out there that could shift it one way or the other that are just impossible to predict. I mean, look at December of 2021. At that point, I don't think anybody was predicting that Russia would invade Ukraine and the impact that could have on the global economy. So there are some black swan events that could happen out there, and it's just impossible to predict at this point.
Mm-hmm. Catalin?
Yes. So I think, this is a very good conversation. I'm particularly focused on Europe. And the reason I'm saying that it's, Europe really realized now that they not only have a problem with importing gas and oil from Russia, they are importing 90% plus of their resources from other countries, including places like Russia and places in South America that are not really stable. Yet Europe sits on massive untapped potential, no resources, mine that produce copper and other metals for thousands of years, really going back to the Roman times in the case of Portugal. Yet nothing has happened in the last 30 years. Why? Because for most part, Europe has not been pro-mining. But things are changing. Fundamentally, I can tell you. We have projects in Portugal. We have our hands on about 4 or 5 different past producing copper and gold mines in Portugal that produced when copper was about 75 cents a pound and have been sitting idle since. And we have been able to take advantage of this opportunity. And we have a roadmap to possibly bring those things back in production. And it's really, in my view, because I'm European myself, I was born and raised in Romania. I live in Canada for the last 20 plus years, but I can tell you that Europe has not been, for most part, very pro-mining. I see a fundamental change now, and that's proven by the fact that we, in our case, we signed a concession agreement with the government late last year, which was a big ceremony. We've signed another agreement with the state mining enterprise about a month ago. So yes, it is a unique opportunity in Europe, and Portugal, I think, is leading because they have a new mining law, and you really see them being serious about it. But we're seeing now signs even in Romania, which has some really great resources and have been not moving forward, as you know, because of various political reasons. But there are signs that the truth come out, and they have to do something. And this is the time when I'm actually a little bit more bullish, especially on copper, because it's all great and nice. We need all these electrical vehicles and all this stuff. Where are we going to get the metal from? Where? There is a lot actually sitting within European countries that we, at least in our case, we are very focused on being able to take advantage of that and I feel really being at the right place at the right time as far as our involvement in Europe.
Yeah, I think it was Robert Friedland that said, I forget whether it's 6 months ago or 12 months ago, but he said it in a few years' time, you're going to need a telescope to go and see the price of copper. It's going to go up by sort of like so much. So certainly anybody involved in copper, I think, is going to do well. Nicole, what's your view?
In general, I think speaking from the very junior end of the equities market, I think the prices will go up. From the exploration point of view, we've been in a bear territory for a while with, the fundamental lack of spending or forward-looking planning from the senior mining industry. We're starting to see them consolidate. It's well known it's cheaper to buy ounces in the case of gold, or frankly, any other metal or commodity, than it is to explore and find them. And in fact, a lot of the companies, like my neighbors in Quebec, are not set up for exploration. So I feel the equities will benefit from that. And then we touched on another point, which is rather interesting, which is we're kind of seeing the unwinding of globalization, or the force towards self-reliance, if not outright protectionism. I mean, the Chinese have practiced protectionism for years, and they've just destroyed commodities that they wanted to position themselves in. And as you see with the United States and the critical minerals list, which, if memory serves, was expanded to like 25 or 26, from a protectionist point of view, like they added zinc to the list. Who would have thought? But I mean, zinc, they have one source of supply of zinc in the United States, and it's critical in hardening steel. So, it's getting interesting from the protectionist, the unwinding of globalization, in part, and in response to what we're seeing to happen in Europe. We're also possibly going to see, due to the lack of investment, there's some thought that we're going to see some vertical integration on the part of battery producers or auto manufacturers themselves, going right down to the source of the commodity they need and securing that supply. And famously, Musk, a year ago, 2 years ago, tweeted, find me a new nickel discovery, I'll give you a huge contract. Well, he's currently getting his nickel out of Indonesia, but he's signed 2 North American supply agreements now. One with Catalin in the States, and I forget the second one, to be honest with you, for commodities that aren't even mining yet. But he's looking downstream, and he's seeing these are going to need to come from North American sources. And again, back to your point, not just from a transport point of view, like rock is heavy. Why truck it? Why put it in a sea can, ship it around the world, put it on a truck and drive it across the country? We have it here. So let's support our own efforts. In my case, I mean, the government of Quebec's been very proactive and forward-looking with regards to trying to identify the full gamut of how they can participate in a digital or circular economy going forward. So it's a very interesting landscape we're operating in right now. And there are some fundamental changes going on.
And just
I think self-reliance is the big one.
And just to give Renforth a bit of a plug before we kind of carry on with your update on Renforth Resources, is you were at our recent May event, and your project was so well liked by the investors is that you won our Mines and Money pitch battle contest. So I think that nicely sort of segues into an update from yourself, and obviously it would be kind of like great to hear a little bit more about you, Nicole, about Renforth Resources and why it's such an exciting opportunity in Quebec.
All right.
Well, slides you'd like to share?
Yeah, we are. Oh, let me press the appropriate buttons. Yeah, we are, as you say, we're in the province of Quebec. So we're located, I think you can see my cursor, Rouyn-Noranda is over here, and there's Val-d'Or. So we're on the northern route of the Trans-Canada Highway, and we have this property here. It's Quebec's newest battery metals district property. It's 330 square kilometers. It's vast. What you see next to it is our gold deposit sitting on the Cadillac Break. Then we're right beside the Canadian Malartic mine. The Cadillac Break runs from the west side of Kirkland Lake in Ontario all the way to east of Val-d'Or in Quebec. It's Canada's most prolific gold structure. So we're backed by a gold deposit, as I say, my tagline. But the story really is Quebec nickel. Now, it's not just nickel. We're polymetallic. We have nickel and cobalt in an ultramafic intrusive, which is occurring in the same place. There's a VMS, which gives us copper and zinc. There's also lead, there's silver, there's a few other things going on, but those are the important ones. So what we announced today in a press release actually is we are now confident this structure, which is a 20-kilometer magnetic feature with coincident EM anomalies. EM is electromagnetic. It can see conductive metals down to about 100 meters. So we're seeing the magnetic metals And then we're seeing the conductive metals because, for example, copper, while it's conductive, is not magnetic. So the EM survey in conjunction with the magnetic survey, are drilling and our prospecting, which we just finished, all these red dots. Everywhere we went to an EM anomaly, we found mineralization when we could find outcrop. We could not always find outcrop. We're confident we have a 20-kilometer battery metals structure. To the north, we have Lalonde, which we know is about 2.5 kilometers right now. Now, why is this important? Well, we're in the province of Quebec. There's the Trans-Canada. There's roads onto this property. There's 2 hydroelectric generating stations to the south. The power lines cross the property, specifically the Rapid Set power line crosses the center of Surimo. Hydroelectric electricity is, of course, clean. There is the power line. There is the road. So we're road access, we're green power, we're the cheapest power in this country, in fact. 20 kilometers, it's on surface all through here. It's less on surface through here, and it's on surface up here. So good jurisdiction, secure jurisdiction, no rule of law, and a good ESG record in the province. So there's what, this is approximately 80% sulfide mineralization. This is a grab sample from the program we just finished. So that's kind of our story. Battery metals in Quebec, well located, road access, green power on surface, and lots of work to do. We've only drilled 5,600 meters over 2.2 kilometers of the 20-kilometer structure. So, and all of this is backed by a gold deposit, and people like gold. And we are pivoting the company to battery metals, meaning we will, you may see us at some point monetize our gold assets.
So
that's kind of the quick and dirty elevator pitch.
No, it's really interesting. Just before I throw it open to Andrew and the audience, so just so I understand, where does the greatest upside or value in the project lie? Is it gold in the short term, but nickel in the long term, or?
Well, yeah. The gold realistically is going to be sold, and the upside then would be to continue the exploration on the battery metals without any public fundraising that would dilute shareholders. I mean, ultimately, the exit strategy is we've already attracted the attention of various people concerned with nickel and copper and that sort of thing. We're about an hour from Eastern Canada, for sure. Eastern Canada's only copper nickel smelter is in Rouen. So, I mean, we're incredibly well positioned, and I think realistically the asset, if not Renforth itself, will be purchased. My personal exit is to get Renforth itself purchased because I get paid in shares and I own a heck of a lot of them that I can't sell in the market. So, the future is the battery metals. The gold will help fund that. We've got 2 gold projects I'm talking to 2 different groups about right now. Not the first time I've had conversations. I've said no to deals. So we're in no rush. Everything has lots of work banked. We have money in the bank for now. We have securities in our trading account. So we're sitting kind of pretty. And our guys are headed back into the field at the end of the month to do some more work. So lots of exciting stuff happening.
Oh, what questions, Andrew, do you have for Nicole?
Yeah, if I could jump in, because I happen to know how positive the Quebec government is for mining, but I think it isn't belabored. I mean, I think to kind of speak to how motivated and how insightful they are, they see this shift happening, and they know how critical and the point in time where if they act, and they have, to kind of harness the potential of this shift into this this new sector and new energy. What's your kind of take on that? Like, have you had a lot of interaction with the government or their kind of take in regards to that, or their vision?
We've had some interaction with the government. We're on their radar screen. It's funny because the gold asset, we couldn't get their attention with the gold asset. They see they've got gold coming out their ears and they don't stimulate that at all. And
Yeah.
Agnico Eagle owns most of the real estate everybody cares about anyway. So yes, we're on their radar screen with the battery metals. In Quebec, if I spend hard dollars, they do rebate cash back to the company. The new critical minerals override to flow through in Canada from the federal government. I'm waiting to hear how that'll intersect with the Quebec, if at all. But We haven't done anything we could get money back from them for yet. We've asked and they've said no. However, by the same token, the other side of your question is when we want to do something, it's absolutely simple and straightforward to operate in Quebec. There's a clearly outlined mining act. They adhere to it fanatically. In order to drill, we need to permit the trees we're going to cut down because nobody lives at Surimo. It's moose pasture, literally moose pasture, or bear, moose or bear. But we cut down the trees, so we have to pay stumpage because it is forestry land. However, the hunters love it because then they've got a new shooting gallery come the winter. So, but it's absolutely a pleasure to work in Quebec. It's transparent. It's clearly laid out in law, which is followed, and there's no political uncertainty that we have to deal with. So, yeah, very secure. I drive there from here. You know, it's easy to get to. So,
Nicole,
I love hearing those types of ones. Oh, sorry, go ahead, John.
I was just curious, could you comment a little bit more about your gold project, resources and geologic characterization? Just curious to hear a little more about that. Sounds like a pretty interesting project.
So we have one in Ontario, which is the map behind me, which was discovered in 1924 that I won't go into because there's no resource. But in Parbec, it sits on 1.8 kilometers of the Catalin break. Our work has actually probably extended the break it was always presumed to go corner to corner on the property. We've shown that it bends back. We have the 1.8 kilometers. We've drilled off a lot of it. We have an out-of-date mineral resource estimate in place that was calculated in 2020 based on only drilling from 2007 to 2019. That gives you 281,000 ounces. Now, if memory serves, it's 104,000 indicated ounces at a grade of 1.78 grams, and it's 170 whatever to get to 281. So 77,000 ounces at a grade of 1.7877. The grade is basically the same. Of the 281,000 ounces, 104,000 are indicated, which is quite interesting. However, it's out of date because subsequent to that, we drilled an additional 15,000 meters to extend the deposit down dip, successfully done, and to validate 13,000 meters of historic drilling, which were excluded from the 2020 MRE. So the next resource update would bring 28,000 meters of drilling to bear to a resource which was calculated on the basis of 27,000 meters of drilling. However, I won't do a resource estimate at this point in time because we're in the midst of reevaluating the model. We see vertical continuity. Now, the geology, very simplistically, we're sitting on the Catalin break. We have gold in the Piche volcanic to the north. We have gold occurring in diorites and porphyries within the schist of the Catalin break, so intrusives in the break itself. And then to the south, we have the Pontiac sediments. But what's interesting is we have a splay of the Catalin break into the Pontiac sediments. And we're finding gold in the sediments where it interfaces with the splay. Not so much yet in the splay itself, very limited drilling. And that's all well and good. And the old model was the mineralization ran with the break, but now we're seeing the mineralization go straight down. And historically, the Catalin break and Malartic and Catalin camps are deep-seated. It's a deep-seated gold structure. It's a primary fault. So we want vertical continuity because the gold mines go straight down. So our 1.8 kilometer footprint is more than adequate. And we've started some early stage structural work, and the bring down of the structural work is they feel they can see at least one subsequent fault, which was a carrier of the fluid, the golden rich fluid. So there's a lot changing behind the scenes with the geologists on that, which is going to require additional drilling to test the hypothesis to see if we can carry the vertical continuity even deeper than we did with our last program. So
Wow.
How deep did you go last? How deep were you before up to now?
Okay, the 2020 resource, 80% of the drill hole intersections were above a vertical depth of 300 meters. And we maybe stepped on some of them. If I go back to the old press releases I put down, we stepped under the open pit. Our vertical separation underground was between 50 and 100 meters from interval to interval in the same mineralized structure. Of course, the open pit goes out the window, right? We have a decline in place. We could dewater the decline and get a look underground, but frankly, we're still so shallow relative to that camp. We can continue to drill from surface.
That's cool. That's good.
Right. Well, thank you very much for that, Nicole. It's a fantastic update on Renforth Resources. Certainly recommend all our listeners to go to your website and go and check out Renforth. I'd now like to move on to our next mining update. You heard from them earlier. It's Goldplay Mining, golden opportunity across 2 continents for gold and copper. Catalin Kilofliski is their president and CEO. Over to you, Catalin.
Yeah, thank you. And let's see if I can share. I think, are you able to allow me to share my screen? And I'll get talking.
Sorry,
Yeah.
Catalin, that was my very bad manners.
I'm going to show a few slides here.
Yeah, okay.
Yeah, there we go. Yeah, perfect. Share. So again, Goldplay, it's a pretty young company. We've started trading on TSXV about a year ago. I've got a lot of track record in the industry myself. I'm not going to go through the details. I was one of the guys that was behind the big discovery in BC, which is Tudor Gold. It was me and Ken Conkin really who moved that company from 25 cents to about $4 and became one of the largest discoveries of the decade worldwide, almost 20 million ounces of gold. And then since that was done, I decided to create a brand new company. And really what we are after 2 things. Most important is we are in a place like Portugal, for example, which has seen mining go back to the Roman times. It's a fantastic mining jurisdiction, has been ranked 5th in the world in 2019 by Fraser Mining Institute. And really, when you look at the mineral occurrences in Portugal, on this map here, you see all those circles and, yellow, green, blue, and white. Now, those are all known mineral occurrences, yet the country only has 2 major mines. So, that really shows you the potential that this country has geologically. People may be familiar with the famous Iberian, Portuguese, and Spanish pirate belt. On the Spanish side, you got major mines, probably one of the largest mines in Europe. And really on the Portuguese side, only about a couple mines. So Goldplay has a new application right in the pirate belt for a large mining concession that sits next to the 2nd largest producing mine in Portugal. And I mentioned earlier the fact that I do generally see a historic opportunity at being involved in a country like Portugal. And this is me here in October of last year signing a concession agreement, a mining concession agreement with the government that includes about 3 past producing projects, 2 copper and 1 gold. And, really it's a great opportunity to be involved in a country like that. What do we actually have? We have really 2 sets of companies we control in Portugal. One has basically a high-grade historic copper mine, underground copper mine, average grade is 2 to 3% copper that they've mined. But when you look at the amount of mining that has been done, there are probably at least no more than 1/3 of the known mineralization has been taken out, and the mine has not produced in 1975. And this project really sits on paved roads, next to power, infrastructure. You can go to a nice hotel within 20 minutes from the project. But more importantly, and I think we discussed this earlier, it is within 150 kilometers of a big copper smelter. So, you have a project which basically has known resources within 150 kilometers of the copper smelter, in an environment when copper is, probably 8 times, copper price 8 times higher than last time it produced. And we will be the first to really take advantage of this possible restart. I'm not going to go through all the projects. We also have a historical open pit copper mine, the same story. Again, probably 1/3 has been mined. Copper open pit grades of 1.2, 1.4% copper, which is really high grade if you think about it, for an open pit of copper, and a bunch of gold projects. So really what we have done before we really put forward a plan on how do we restart those projects, how do we bring them forward to production, we've done an initial work program to confirm the historical grades and mineralization that is known on those projects. And we were very successful to have some good surprises. One was on a historical copper mine, we've actually encountered gold, which has never been even mentioned before. We drilled a hole 2 meters of about almost 6 grams gold. And then not on this slide, we've announced about 2 months ago another hole on a historical copper mine, the same one actually, that ran about 10 meters, running a 1.2% copper. So with that being said, our objective is now to show a roadmap to production restart and take advantage of those, what I see historic opportunities in a place like Portugal, to bring those things online back into production in a perfect scenario where copper is much needed, and Europe needs to encourage metal production within the European countries' boundaries. And we also have some projects in BC, but as we keep spending more and more time on Portugal, we're really probably going to see us pivoting into becoming a pure European focused company. You know, we do have some very attractive projects in BC. We're going to probably be drilling this summer a nice huge target that we have ahead of us, but most likely, because I see such a great opportunity in Europe generally, we will be pivoting Goldplay over the next few months into probably a pure European focused company, and then maybe spin out or joint venture the BC assets so that the story is more clear and easy to understand and be able to take advantage of what we see ahead of us. The company is well funded. We still have about $2 million in the cash in the bank. Our market cap is really tiny. It's a $3 million market cap. So effectively 2/3 of the market cap sits in cash, which is unbelievable. And there is a reason for that. And this is also the BC assets. They are not a good fit with the Portuguese ones. And the reason is, we did the flow-through funding last year for BC projects, money which will be sent this summer. And now it's the flow-through selling. So we went from 15 cents down to 6. So that is another reason why you're gonna probably see a shift in strategy for Goldplay, where we're gonna be pure European focused. But feel free to go on our website and get more information. We have a great team. Not mention everybody, but the guy here that's really a key guy for us is Jose Mario Branco. He lives in Portugal. He's a senior geologist, and he's worked with the Lundin Mining for 7 years. So he's the guy that basically managed the Lundin mining operations in Europe for 7 years. Yet we are a small company. So we do have really good people. Also an advisory board, Walter Koh, CEO and founder of Skina. He's also a shareholder of Goldplay. Ken Brank, ex-senior Newmont exec. So yes, we are a small company, but we have very solid ambitions here, and you should see us growing and kind of going back to what we all have done, 100 million plus companies, through results and work in the ground. So over to you, Andrew.
Thank you very much for that summary. Bringing in Andrew first from Market Mindset. What questions do you have?
Well, I'm lucky because I've known Catalin for some time over at Tudor Gold and the work he did with Ken there. And then to see him put this together, I'm glad you brought up the management, because to bring together that advisory team, management team, and I know some of the money to get this going, there's some big names and there's a lot of support there, and you don't get that unless you do all the hard work that he's done before. And I loved this, which we didn't talk about, but this gold target at Big Frank, because it's blue sky and that stuff I enjoy. But what really is attractive is the Portugal assets and this, and I'm glad to hear about this shift as well. So maybe you can kind of talk us about how that came about, but also with ESG being so critical, and Europe understands it, I would say a lot more than we do. Because that's going to be such a big part of this story. And I love the supply chain idea of, if you're delivering copper to Europe, that's a big bonus, and it's it's an easy transportation from Portugal to the rest of Europe. What's your ESG? How's that developing? What's your kind of take, and how's that working with the government?
It's a very good point, Andrew. And that's really, I think, one of the key reasons that as our own strategy, Goldplay, as I said, it's a young company. We're training for a year. We started with a vision of, BC, big discovery potential, which still is. And we're hopefully going to be drilling this summer, and then, bring in more near like brownfields project in Portugal. Now, because of what's been happening with everything we've covered in today's call, really, I do see really a historic opportunity to take advantage of a place like Europe and be able to feed right into their needs, the actual needs of the continent, right? And we have already amassed a significant portfolio of projects in Europe, and we've also been able to strike some really great partnership in Europe, like a company of our size. Really, a month ago we've announced we signed a partnership, 85% Goldplay, 15% EDM, which is State Mining and Enterprise. So, we do, through our track record and credibility, we do have the ability to take advantage of those, really brownfields projects in Europe. And this would be a direct feed into European needs of metals within, their boundaries. As I mentioned earlier, Europe has facilities to process metal, but currently even mines in Portugal, the ones that are producing right now, they are shipping most of their concentrates down to Asia. And we've made contact with a copper smelter, which, as I mentioned, is about 150 kilometers away from our project. They have spare capacity. They would welcome the feed. They would welcome if we can bring them concentrate, right? So there's a big disconnect right now where things don't add up, right? So you have Europe needs metal, you have a big copper smelter, they don't have enough feed. Mines in Portugal and Spain, they are sending their feed down to Asia, where they could feed a smelter within a 200-kilometer range. So, there is this type of opportunities where we're like, oh my God, this is the perfect time to take advantage of those. And we are, I think, very well positioned for it. And you probably are going to see us bringing in more leadership to the same levels of those guys as part of the company. I'm actively looking for a president of Goldplay, which can be somebody with a serious track record that can help us really take on and take advantage of those unique opportunities I see.
I've just got time for one more quick question from the floor. How much are you looking to raise, and what would the money be used for?
So Andrew, as I mentioned to you, we have about 2 million in the bank right now. Most of the money will be earmarked for BC because it's flow through and we have to spend it. Really, every time we've raised money, it's money in the ground, and we are a very lean company. So I think the next raise here will be probably done in the context of the market in the range of about, call it 1.5 to 2 million. And the money will be really used to start advancing one of the projects, which we have an underground copper mine in Portugal. The one we've already done about 1,000 meters of drilling on it. And it was really checking the numbers because we have so much good historical data, but we didn't want to rely on that before we come up with a drilling campaign, big drilling campaign. So we've done 1,000 meters. We had excellent results on that. And I think the next phase of that exploration program is roughly about $2 million. And this is the money that we'll be looking to raise to really create a roadmap to a resource definition, PA, and move the project towards a possible production restart scenario.
Okay. Thank you very much for that. If I can just ask you just to go and take your slides down so I can also introduce our final presenter. I do apologize. There was one question we weren't able to get to, but you'll see it, Catalin, in the chat box, the question from Jerry Dinsdale. If you're able to answer it in the chat box while we move on to the next presentation, that would be absolutely super. But just to move on and introduce our final presenter, we did hear from him earlier, a really interesting uranium project, John Cash, who's CEO of UR Energy, who are engaged in uranium mining, recovery and processing operations, as well as the exploration and development of uranium mineral properties. Over to you, John.
Well, thanks a lot, Andrew. It's good to be with you guys this morning and from Casper, Wyoming, and talk about your energy. Certainly a very exciting time in the nuclear space and uranium production. But Your Energy, we formed in 2004, and shortly after that became publicly traded on the Toronto Exchange under URE, and a little bit later began trading on the New York Exchange under URG. So we are publicly traded, and there are a couple of options to be able to buy shares in the company. So we are nearly a pure play uranium exploration, development, mining company. We have a number of projects throughout Wyoming, which is a great jurisdiction to work in. But we have two projects that we really focus on, and they're really our flagship properties. The first one that we put into production is Lost Creek, and we put into production back in August of 2013. Since that time, we've produced nearly 3 million pounds of U3O8. and have sold the vast majority of that in contracts to U.S. utilities for generation of electric power. Lost Creek has been a fantastic property, a great resource in the ground, 11.9 million pounds of measured and indicated U3O8, an additional 6.6 million pounds of inferred, reasonable grades. The recoveries have been fantastic, and that's really one of the claims to fame for the property. In the in situ world, if you get anywhere from 60 to 80% recovery, that's considered to be pretty good. But at Lost Creek, we're getting about 90% recovery on average. In the fall of last year, we started an additional drilling program to try to get us in a better position to be able to ramp up very quickly, because the uranium price is increasing very nicely, and we're hoping to sign contracts. So that drilling program is nearing its end, and we'll be ending that here literally within days. And we're also constructing our next header house 2-4, to go into production very quickly. So great property, fully permitted, up and running, plants built, a great history of production there. Switching gears to our second flagship property is Shirley Basin. It's also in Wyoming. It's also an in situ property. We have all three of the major permits we need there to begin construction on it. And so it's sitting idly by, waiting for us to get the contracts in place so that we can build it out. Once we get the market signals to do that, it'll take us about 1.5 years to build it out at a capital expenditure of about $30 million. And we'll be able to ramp it up to a nearly 1 million pound a year run rate. That effectively will double our production capacity, because the licensed capacity at Lost Creek is 1.2 million pounds per year. And we've approached that level already on an annual production basis. But probably what we're most famous for in our company is low cost production. Lost Creek, when we were really producing heavily there just a few years ago, pushing the 800,000 pounds per year mark, our cash costs, C1 cash costs from the mine site, were a little over $16 a pound. The all-in mine site costs were about $33 a pound. So to put that into context, the spot market today is around $51 a pound. So we're in the money. However, we've never been a company to sell into the spot market. We're fairly conservative. We're looking for long-term contracting, and we're working aggressively to pursue those contracts. So from a finance position, we're well financed. We last quarter, when we came out with our numbers, we had 45.8 million in cash. Beyond that, we've got a great inventory sitting ready to sell. We can convert it into cash in about a week's time, and that's worth about $14.5 million. So a couple of great projects ready to really get ramped up. But we'll comment on just a few catalysts that we're seeing in the market right now. First of all, and most importantly, is the green energy attributes of nuclear power. So many countries around the world are expanding their fleets right now. China, for example, has plans to build out 150 new reactors in the next 15 years, and they say they're on track for that. Beyond that, France is expanding theirs. England as well is doubling down on nuclear power, South Korea as well. So post-invasion Russia into Ukraine, so many countries around the world are saying, hey, we've got to look for alternate supplies of energy, and nuclear is at the top of the list because of its carbon-free attributes. Beyond that, the next catalyst is we've seen a lot of financial players jumping into the space over the last few years. Most importantly is Sprott. Sprott has developed a physical uranium trust, and they've purchased over 55 million pounds of uranium since July 19th of last year. And that is putting a lot of pressure on the market. And we expect that they'll continue to put a lot of pressure on the market as they buy up the physical inventories that are out there. And then the final catalyst that's worth mentioning is, of course, the Russian invasion of Ukraine. Russia is a big producer of enriched uranium product and also processing of uranium. I've seen different numbers on this, but I think the most reliable numbers are they have about 43% of the capacity to enrich uranium globally, and about 38% of world capacity for conversion. So there right now is tremendous discussion globally about cutting off that supply out of Russia and going to other places to get it. But quite frankly, that other capacity doesn't exist. So governments around the world are looking for solutions. And just 2 days ago, the Biden administration came out with a proposal to dedicate over $4 billion to build up the U.S. Capacity on the nuclear supply chain. So a lot going on globally right now. It's a great time to be in uranium. We're expecting a very bright future. We expect volatility in the near term, especially because of Sprott and geopolitics. But in the longer term, with the green energy attributes of nuclear, we think it's a really bright future.
Question from the audience. Could your high recovery rate be a function of underestimation of grade?
Absolutely. In fact, early on, we were recovering more than 100% of what the geologist had estimated as being there. So we had to go back in and change some of our valuations on cutoff. And but still, we're getting 90% recovery. But I think also it's a function of the kinetics of the reaction. Our grades there, the ore is very fine grade, fine grained, I'm sorry, very, very small. So when the lixiviant hits it, it's got a very high surface area to mass. And we believe that that's helping us get the high recovery rates that we are seeing.
Yeah. You've kind of talked extensively about uranium being green. How about, how do you deal with its perceptions of safety? Because obviously over here in Europe, we think about Chernobyl, you recently had Fukushima. You know, I appreciate that 3 Mile was, 1978, but I still imagine that obviously people have quite long memories. So I imagine there still must be in the US some public negative perception about uranium and nuclear that you're having to deal with.
Yeah, absolutely. And not just in the US, but globally. Literally this morning, I saw a survey that came out that said 33% of people in the US don't support nuclear. So we are making gains there. People are beginning to recognize that it is safe and that the green energy attributes are incredibly important. So we have a lot of work we need to continue to do with regard to education. But having said that, there will always be a small handful of people that no matter what the facts are and how much education takes place, they will refuse to listen to that. And I think partly that's because of the fear of radiation. It's something you can't see. And if you can't see it and it's hard to understand, then people have a fear of that. But just to put nuclear into context, the World Health Organizations suggest that there are about 7 million people that die prematurely each year from particulate emissions from fossil fuels. You compare that to the number of fatalities that we've seen, let's compare it to the US industry, where we've seen 10 fatalities in commercial electric generation since the inception of the industry. Of those 10, only 1 of them was because of radiation exposure. So we'll put our reputation and our numbers, our statistics up against any other commodity out there for energy generation. We think we've got a great record, but getting that message out there is very challenging.
Andrew, what questions do you have?
I've got tons. We're lucky to be able to talk to some analysts about uranium. We've been excited about it for some time, so we're certainly fans of it. I think you being in the US is so critical because you've got the Biden administration. Certainly, Democrats in the past have not been terribly in favor, but they've really changed their tune. But I'll ask something from a different kind of perspective is the development of these like small reactors, these small power plants, the small modular ones. What impact is that having in the market?
You know, right now it's building some excitement, but I think we have to be careful not to build too much excitement from those. The demand for fuel for those could potentially grow to be a very, very significant quantity. However, building those out, we're looking at probably 10 years out before we see tremendous demand for those. So yeah, it's out there. It's exciting. I believe personally that it's going to be the wave of the future, the technology that we move to, but we can't jump into that too soon from a demand perspective. It's a ways out yet. A lot of permitting, a lot of design work, construction, and proving that out before the demand is really realized.
Can I ask another one? Just jump in too, because I know with the infrastructure bill and different types of battery initiatives they have embedded in there, are there grants or initiatives for nuclear specifically, other than the $4 billion you'd mentioned? Is there any other kind of technology plays or things that you can also utilize?
Yeah, there are 2 other legislations or bills that have been passed already. The first is the Uranium Reserve. It was passed in December of 2020 by a bipartisan Congress, and it allocates $75 million to purchase domestic uranium here from the US to fill a reserve, much like the petroleum reserve for the US government. In June of this year, this month, they are expecting to come out for an RFP so that we can bid into that and sell uranium into that. We're one of what we believe are only 2 companies that have US supplies available to sell into that. So we are expecting to be able to provide a very good bid on that. The other one that's already been passed is a part of the Infrastructure Act, and that's $6 billion. That's separate from the $4 billion that I just mentioned. $6 billion that's being dedicated to keep existing reactors up and running here in the US. We have 93 reactors. There's a catch to that, though, a caveat. There's a preference to give the funding to nuclear utilities in the US that buy nuclear fuel from US suppliers. So we're hoping to be able to benefit from that as well. It's a very short list of nuclear players, nuclear uranium miners here in the US, and we believe we're at the very top of that list.
Thanks. Cool.
You talked in your presentation about how low your cost of production was, and you actually gave some numbers. Was it $33 a pound? I think was the number that I noted down. How does that compare to your peers?
So here in the US, we believe we have the lowest cost production, and even globally, we believe we have some of the lowest cost production outside of Kazakhstan. Kazakhstan does beat us. They've got some great quality resources there. They're not beholden to a lot of the environmental regulations, health and safety regulations that we have here in the US. But having said that, I think companies around the world, utilities around the world are really beginning to appreciate the value of ESG. And we lead the way on that in the US with uranium production. And so I think maybe the tables will start to turn on that, where US companies and European utilities say, hey, look, yeah, they may not be the cheapest, but they have a green record, and that's where we're going to go to buy material.
Mm-hmm. We've obviously mentioned the Ukraine-Russian war a few times during this show. How dependent is uranium's price demand on the Ukraine-Russian war and geopolitical uncertainty?
Right now, I don't think we've seen tremendous change. I think there's a few dollars increase built into it because of that. However, I think everyone's still waiting for the other shoe to drop because right now, the material from Russia, the material from Kazakhstan continues to flow. However, there are two bills in Congress in the US to cut that off. So I think everyone's just waiting to see what happens. There's a little bit of calm before the storm, but everybody is watching that very, very carefully. If that supply gets cut off, I would expect overnight the price of uranium to go up $10, $20, $30 a pound. If that trickles into Kazakhstan, which is a former Soviet satellite, then we could easily see uranium over $100 a pound. That's a lot of speculation and a lot of ifs. I don't know what's going to happen, but there is tremendous risk there with regard to supply coming out of Russia and possibly out of Kazakhstan. I talked about the processing that they do in Russia. They're not a big time miner of uranium. They do the processing, and they're the big processor for the world. The supply really is coming out of Kazakhstan, their neighbor to the south. Kazakhstan provides about 46% of global primary supply. And so if they get drug into any sanctions, counter sanctions, or if Russia cuts off transportation routes, because that material is going through Russia into St. Petersburg and then into the Baltic, then we could see dramatic swings in price very quickly.
Yeah, it certainly seems to be that when I talk to a number of investors that have made significant investments into the uranium question, into uranium mining companies, it isn't so much as when it's not so much as is the price of uranium going to hit $100. It's kind of more a question of like when, really. I think that's the sort of like bigger question. I think that we've kind of like come up to our hour. I see it's just reaching 6 p.m. UK time, and we're out of time. So I'd just like to go and thank again our guests, who were Nicole, who is President and CEO of Renforth Resources, Catalin, President and CEO of Goldplay Mining, John, who just heard from UR Energy, and Andrew, who's Managing Director of Market Mindset, and also to our media partner, Resource Global Network. We've got some great events coming up around the world. We've got our IMARC event in Australia. We've got our London event coming up here in November. And we also have our Future Minerals Forum event happening in Riyadh next year. Please feel free to contact me or any of my colleagues for more details. My name is Andrew Thake. Until next time, stay safe. Thank you very much.
Thank you.
Bye-bye.
Bye-bye.
Thank you.